Hello stalkers, welcome back. I hope you enjoyed your weekend. Let's start analyzing the market for tomorrow. I'm on the weekly chart of DFM market index, that is Dubai Financial Market. Last week it printed a red candle. This clearly shows some weakness in the market. It came down to retest 4,779 points that we have already identified as our support zone, and from here it bounced up to close at 4,829 points. Looking at the overall scenario, DFM market index no doubt is in a strong uptrend, but check this out. Recently, right from this area, that is 4,361 points, we are seeing almost all green candles. On the way up, it just took a pause. This should not be considered as a correction phase. Usually when the market is trending up, we see strong leg to the upside. It comes down for a correction, establishes a base, and then it makes a new leg to the upside. Whereas in this scenario, we are only seeing upside momentum. We did not see any correction or a deeper correction where it can establish a base and then move up. So overall, I still have a feeling that market is a bit overbought. There are strong chances of correction, but at the same time, trend is very strong. It's very bullish. Let's go down to daily, and here we can clearly see nice price action that shows us some signs of weakness after it printed this red candle right here last week, and we are also seeing a recovery. Market bounced up from 4,779 points and then it printed three green candles back to back. So this will be now a test for DFM, whether it can break past 4,834 points and close above this. In this scenario, we should expect it to hit 4,902 points very soon, that is resistance. Not to forget, previously we saw strong wicks at the top indicating rejection by the market. We could not see a solid green candle close above this zone, so this becomes our supply area. On the daily chart, let me show you something that is printed on the MACD indicator. Right here we can see selling momentum is now increasing. We can already see a bearish crossover right here. This indicates selling pressure is about to start or a correction is about to begin. Check this out. Previously when it was climbing up, although we could see red candles on the way up, but here on the MACD chart we can see almost all green bars. This indicates buying momentum. However, we can see recently with this last 3 to 4 candles, MACD has already started to print red bars indicating selling pressure is now increasing, or there are strong chances that correction or downside momentum is coming. Now the question is, if at all market wants to correct itself from its current zone, that is 4,829, which was Friday's closing, then there are chances from current level. Immediate support stands at 4,779 points. I think market will take out this easily. Next support area is at 4,699 points. In that scenario, market may drop 2.57% from its current zone. If this zone fails to hold, then we have another strong support at about 4,658 points right here. This should be also acting as a support. So now do not expect market to come down aggressively like this with just one or two candles. There are chances slowly and steadily it may revisit any of the support zones and come down. This is my analysis. This is what I'm thinking. On the positive side, if at all market wants to continue its upside momentum, if at all we can see a solid candle close above 4,834 points, then there are very good chances we may see 4,902 points. After hitting this zone, we can expect a correction. In both the scenarios, correction is due. This should not be considered as downtrend or negative. This should be considered healthy, because once market comes down, it may establish its base, it may go sideways. We will see contraction volatility. It will gather its energy to pump again to the upside. Overall, DFM market index on the daily chart is also very bullish, but be prepared for a mild correction that is good and healthy for the market. This is the weekly chart of ADX market, that is Abu Dhabi Securities Exchange. It's still looking weaker. Weekly candle close is not very positive. We can see a perfect dodgy scenario. This indicates indecisiveness in the market. But the best part is, as I had mentioned earlier, market is surviving or holding up to 9,245 points, that is acting as a support. There are good chances we may see some upside momentum, but I would be only positive when we see a candle close above 9,404 points. As of now, it's very tricky. There are chances it can even come down aggressively to 9,160 points. Obviously, this would be negative. In this scenario, we can even expect it to go lower. Hopefully that does not happen. Coming week will be very crucial for ADX market. It has to perform. I want to see a solid green candle on the daily chart and on the weekly chart as well. It's not necessary that one green candle should cover up 9,400. Let it be in one candle, two candle, or even three candles. As long as market is above the zone and it closes above the resistance, we should consider this to be bullish. Let's go down to daily and see how the chart is looking. And here clearly we can see a zone is established right here, and we are seeing contraction of volatility like this, and this is to be drawn like this. Now it's time for a breakout coming week. We are seeing market is just going zigzag. Upper range is resistance, lower range is support. It's been bouncing up continuously from about 22 of November. So now it's time for a breakout. It would be very interesting to see after going zigzag whether it breaks to the upside or it's breaking the zone and coming down till about 9,160. In this scenario, as I mentioned, it can come down till about 8,974. That is next identified support. I hope that does not happen. Overall, as we can see, ADX market is still struggling. It's going sideways. It's in a range. We are not seeing good recovery or good moves in the market. If biggies start performing, especially IHC, it will lift up the index, it will lift up the market sentiments, and other stocks may slowly start following. This is the daily chart of DSI, that is Drake and Skull. It's looking very interesting. Our planned entries in Friday's session was right here at around 0.365. We have identified this as our support zone. We can see a strong upside momentum. Previously, I had recommended entry into this zone. By the way, if at all you are interested to join my YouTube membership for daily stock recommendations with entries and exit, you must scan the QR code. Also, link is in the description. Talking about DSI, last candle close is very positive. Our first target is almost hit, that is 0.377. In Friday's session, it went up till about 0.376. I'm still positive, although it got rejected here. There are still chances it can continue its upside momentum. In that scenario, my next target is 0.390, and then we are looking at 0.400. That is strong psychological and technical resistance area. However, any entries that you take should be planned with a proper calculated stop loss. In case if it tries to go up and gets rejected, we have our support zone at 0.365. This area should be considered as buying opportunity. If this fails to hold, then there are chances it can come down to the next support at 0.359. Overall, DSI is starting a uptrend. We can see it's in a strong decline or a downtrend, and from here we saw a breakout of this trend line that was acting as a strong resistance. Whenever DSI tried for a breakout, it got rejected again and again. So if this is to be considered as first leg to the upside, this is correction phase, then definitely we want to see a new leg to the upside that should be higher or bigger than this leg. So overall, DSI is gaining momentum. It's looking promising. Let's see how it performs coming week. Hit the like button if today's video was helpful. Thanks for watching. Keep stocking.